So thank you everyone for joining. So let's get underway. I guess my first question, or maybe if I give a bit of a preamble. So when we looked at the lineup for the event today, one of the questions was how do we determine who does the outlook? And the methodology that we determined in the end was based on our LIPA data. And in fact, HSBC had an incredibly strong year in terms of their LIPA performance in the Hong Kong market. They came in with approximately 10 different awards. So it seemed very simple for us to choose the investment outlook. So Bill, thank you for that.
Thank you.
I guess given recent performance, I'm quite interested in your current investment setup. So from a couple of different dimensions, what does the process look like? Is it entirely fundamental, old school? Is there a quant overlay? It would be good to kind of understand where you are, and then as a follow-on, where you might see that changing over, say, a 3-year time horizon.
Okay. Well, thanks very much for the question, the opportunity to talk about that. We are very fundamentally driven. Everybody says that, but everybody means something different by it, is my observation. What we mean by it is that we're very focused on finding outliers to what we believe is a very strong relationship between profitability and valuation. So the more profitable a stock is, the higher the valuation the market should accord that stock. If you find stocks that are cheap relative to their level of profitability, that's the area of interest for us. When you start to dig in, what you're really trying to understand is what's the controversy? We're using consensus numbers for the profitability, so why is the market according this stock a lower valuation than it should based on its profitability? And what we want to understand is what's the controversy? Why is the stock doing that? So that's what we focus all of our research efforts on. That's what all the analysts are focused on, answering that question. Sometimes it's for good reason. A cement company buying an electronics company kind of deserves to trade at a lower valuation. But sometimes it's not for good reason. Sometimes the market is worried too much about something or is missing something. We then do our portfolio construction, all the research, all of the ecosystem is very quantitative. So we have very strong quantitative backup. That's where our quant bit comes in. And we believe that combination of skill and fundamental research plus a quantitative approach to portfolio construction is a sweet spot for delivering performance, particularly here in the region.
And is that going to evolve? Are you kind of at a steady state in terms of the process, or as we look at perhaps new data sources that are becoming available, becoming more mainstream, do you see further evolution?
Yeah, that's a good question. We're constantly trying to evolve the process and to enhance it, both in terms of the way that we approach research and the way that we use the quantitative tools. With respect to what you mentioned, we would love to introduce a kind of an AI component, but I think what we're very interested in is making sure that fits what we're trying to do. It fits our philosophy, it fits our approach. I don't think that anybody can succeed just by building in random AI factors that they're sort of sourcing from the market and trying to jam them into their own process. So for us, it's meant, and we've started the initiative, it's meant going back and understanding where can we help fund managers. And really for us, it's in reading a much higher volume of information, reports, often in other languages, and trying to provide fund managers with a dashboard to say, okay, you own this stock or you don't own this stock, it's a big underweight, and there's something going on, there's something trending that you need to look at. The machine doesn't know what it is, but it's spotted that something's going on, so fund manager, go away and look at it. There might be an opportunity here. So we're building out that capability now.
Thank you. So, David, if I direct my next question to you. So, Pacific Epoch is a provider of alternative data, and I shouldn't just say a provider of alternative data. You actually overlay that with a research component. So, from your perspective, how do you see this information being incorporated into the investment processes across the region? And is that significantly different to what you see? I know you're based in New York, so how does that compare to processes elsewhere in the world?
Yeah, thanks. It's a great question. You know, we've sort of been at this for 10 years, providing, you know, investors with a data-driven, you know, China TMT, internet, and tracking of sort of global brands and products selling into the Chinese consumer. And, you know, but we've sort of stayed away from the pure API approach because of our staff of 70 in Shanghai. Most have been there 8 or 10 years. You know, we sort of tease out what the data means and why it's important, and really try to identify for investors, you know, where's their pain, what are they missing, where's their gap, and try to create a solution rather than a data dump. So we don't really think about sort of big data as the more you have, the better you have. You know, and we often get sort of lost between maybe a fundamental team and a pure data center right in the middle, and we often latch on to the fundamental analysts. So from our perspective, you know, the marketplace for the long onlys particularly has really sort of come closer towards us, but there's still hesitation because I think there's a lot of issues on compliance, on where you're getting the data and things like that, and I think that can be you know, challenging if you're not really you don't have everything tightly you know, tied down on the ship, if you will, from our end. So we end up, from our perspective, it's really important to, you know, get the blessing of the compliance and pass all those sort of sniff tests, whether it's credit card data, usage data, you know, GMV data from the online platforms, and we've stayed away from pure consumer data, if you will. Everything we do is tracked in the public domain. So I think that's maybe hurt us for a little bit when, you know, you really resisted sort of you know, dumping data at folks, and now I think as we've built the products out, it's sort of come to our benefit, if that makes sense. Yeah.
And the second part was on differences between, say, the US investment process and Asia.
Yeah, no, it's a great question. I think, well, you know, and I would even add the UK, right? You know, the UK certainly where MiFID sort of was born, and having watched that inside Bear Stearns for 10 years evolve, sitting under the soft dollar desk and thinking that will never happen, they'll never unbundle, or was I wrong? But I think, you know, I think all markets are using it a little bit differently, but I think the global sort of platform shops that are in those 3 markets, called New York, Hong Kong, and London, and are really stepping up their game. I mean, it's really impressive the way they're trying to manage it. And I think even better than some of the multi-strat hedge funds that sort of had done it really well just because they used a lot of it. But, you know, by virtue of the fact that there's more turnover there, you can really lose a constituency very quickly. And I think from that perspective, the long onlys are kind of establishing a process. They're not sure where they want to get to, and I think the smarter ones are sort of going about it a little bit slower and trying data scientists, but trying not to, you know, go beyond the sort of fundamental process. Whether it's, you know, we build our thesis on change. That's what we think about. Things like that. So I think that's been sort of the harder part. So we just try to solve a problem that they're having and think about it that way. Yeah.
And Stewart, so does that jibe with what you see from a Citi perspective? So is the buy side increasingly demanding new data sources as part of your analysis? And I guess a follow-up to that is, does that change the skill set of the sell-side analysts that we're familiar with?
Thanks very much. It's certainly, the buy side is demanding more interesting and creative ways of getting data into our research and using that to augment our investment analysis. And certainly Citi has invested heavily into what we call the Innovation Lab, group of data sciences based in Tel Aviv that help us on a project-by-project basis, helping the analysts with their research ideas. So we've invested heavily based on that demand, and it's been a big benefit to us in creating ideas and helping our clients analyse stocks and making money. With regard to the skill set, I think that the great thing about sell-side research analysts is that it takes all sorts, and there's no cookie cutter that makes a good research analyst. You have to be intelligent, you have to be creative, you have to be energetic with good written and financial analysis skills. Increasingly, we have people who are more technologically savvy coming through our system, but it hasn't fundamentally changed the skill set of a sell-side research analyst.
We were talking outside earlier, and you know, there's a general narrative around sell-side headcount reduction globally. You're clearly going in the other direction. You talked about expansion of your research team in Asia. What's the driver there? Is it individual firm performance? Is it just that you see an enormous opportunity here? Is it a rebalance of assets? What's causing the increase in research numbers in region?
Fortunately, Citi's off to a good start here and positive start out here in Asia Pacific. It's a big priority that this part of the world for our bank and the broking business. And fortunately, we've been lucky enough to be able to expand and looking to especially expand in our China coverage this year.
Thank you. And Monica, if I bring you into the conversation. So the topics so far have been quite equities-centric. You're bringing a credit perspective. And I suspect that the impact of MiFID from a credit landscape has been quite muted, in fact. When you go beyond your own investment process, what are the kind of areas you look for? How much external expertise do you leverage, and where does that fit into your process?
So yeah, I mean, I think equities as a market for Asia is a younger market. The development of the liquid tradable bond space really started in end of 2009, 2010, where we really saw the growth. So as a younger market, we never really had as much coverage, I would say, in credit research from the sell side as compared to equity side to begin with. And MiFID has had a muted effect, that's true. We generally, I think, since inception from when I started trading in Asia credit markets at end of 2009, we have really been quite self-reliant. So the type of research that we do, you know, we're very bottoms-up, fundamental-based hedge fund, and a lot of my trades are premised not only on taking a view fundamentally, but also from an events type of angle. And so when you sort of think about, you know, and I think this is a process of thought that we've been going through even in our own firm, which is how much can you really systematize in that research process, and as we filter through from origination of trade idea all the way through execution, how do you size a trade, which is just as important as whether you get something right fundamentally. Obviously, time horizon of that trade matters. So, you know, you may have a different target, short term versus medium term versus long term. All of these are very human thought oriented that is difficult to actually pin down in a system. If you look at the basics of what we do in credit, and I think credit as an instrument is, you know, we can argue that it's actually more complex than equity. We have, you know, in a bond, you have the rates component as well as the Z spread, credit spread. And as a bond instrument, you're looking at duration, you're looking at the curve, you're looking at so many different types of instruments that have embedded puts or calls. You have corporate hybrids, you have tier 1 instruments that are different than the senior bonds, you have senior unsecured versus secured. So it's complex. And so I think it's very difficult for me yet to imagine removing a heavy human component. I think there are certain things we could systematize, such as the basics of trending of history of a bond. But even so, I think when we look back and we try to approach it the way, I was a lawyer before I did this, so I practiced law for about 5 years in New York, and a lot of what we do as a lawyer is about looking at case studies, about looking at precedents and doing comparative analysis that way. So I try to bring that type of diligence process over to what we do in credit. And to some extent, you can do that, but the reality is that, especially in Asia, there are nuances across every region, and there are jurisdictional enforcement risks that are different. But also, even if you look at China, the landscape, it's broad. And so looking at each region, how to approach, bond from that has maybe more sponsorship from the government from Beijing versus, smaller local region, or whether something is a SASAC bond versus something else. I think all of these are nuances that we have to take into account from a human perspective to think about what will they do next. Because it's really not about historical, it's about future. Forward-looking. So, as we all know in research, it's garbage in, garbage out on assumptions. And so I think the complexity of approaching research from a credit side is I think it's something that will keep us, hopefully, as people in business for a long time and not be easily replaced by AI.
Okay, thank you. So I guess if I paraphrase, I heard you just say that the credit markets are too complex for a fully systematic process. Is that a slightly controversial way to say what you just said?
It's
are
a
we still smarter than the machines?
I guess at the moment I would say that as a generalization.
Okay, and so if I extend that, it would be very difficult to run a fully systematic credit hedge fund today effectively, given Asia market constraints and the challenges you just...
Yeah, I think it would be arguable whether you could do that in sovereign bonds, but corporate bonds, yes, I would say so.
So thank you for that. Bill, if I come back to you, one of the... my own background is via Starmine, and Starmine really got its start in the market by rating and ranking sell-side analysts. And in fact, I know that Citi still uses that process today. As we see the investment process evolve, not just because of MiFID, but new data sources, increased technological power, and all those types of attributes, do you think we'll also see a kind of increased adoption of that kind of rigor of systematically evaluating buy-side analysts? Do you think that that's coming to the buy side in the near term, or do you think that there's still a lot more nuance to how you measure your own analyst performance?
No, I think that's a good question. So I think one clear trend is obviously towards, on the buy side, less dependence on the sell side. I wouldn't say no dependence, but less dependence on the sell side, and people increasing the resources that they have internally, and as Stewart said earlier, perhaps demanding the higher value-added staff from the sell side and doing a lot more of the sort of basic stuff internally. For instance, we've got 45 people based in India, in Pune, who do a lot of that kind of base load work for us and then pass on template valuations to in-country analysts. So I think you're right. There are already tools in existence to evaluate quantitatively the performance of buy-side analysts. They already exist and they're getting used. So I think that those tools will be developed, expanded, and more people will use them. As a buy-side, though, I don't think you can completely quantitatively evaluate the performance of analysts. There's more to it than that. How engaged are they with the fund that they're actually involved in managing? How proactive are they in coming forward with ideas or commenting on what's going on in their coverage stocks in the portfolio. How much do they contribute to the discussion on stocks that they don't cover? Things like that, I would say, are very difficult to evaluate quantitatively. So I think it's always going to be a balance between quantitative and qualitative measures on the buy side.
Right. And Stewart, I'm sure that's not the first time you've heard a kind of comment that the place of the sell side in the research process is changing. From your perspective, where is the opportunity in all of this revolution and change in the investment landscape?
Just to echo what Bill's saying, it's really in the higher value activities for our analysts. So a couple of things that we really encourage the analysts to do is build up that personal relationship with all their counterparts on the buy side, and establish a relationship with our go-to provider in terms of whether it be industry knowledge or their corporate access or their stock picks or their great analysis on individual stocks and on the sector. And the big thing for us is to encourage them to get that personal interaction up, get more client requests, and take them on reverse roadshows or field trips to see companies and so on and so forth. And that's really where the strategic partnership and personal relationship development and higher value activities that we're aiming for to help our buy-side clients make money and do a better job themselves.
Would I be right in assuming that the kind of the buy-side audience that you cater to from an Asia perspective is completely global? You have a lot of people that you interact with in London and the States and elsewhere. I'm just curious if that is the case, what kind of technological tools you use to kind of power that interaction. I know you said when we met earlier that the morning meeting you sat in was very similar to one that you might have sat in 20 years ago. So I'm curious how technology might be changing the way in which you work with your customer base.
Sure. I think the biggest change that's happening right at the moment is with our international clients is more video conference calls. It's still a big part of our job is to go marketing in London, New York, and the other financial capitals of the world and see our clients. But increasingly we're finding with new technology such as open exchange, etc., that we can hook up with our clients internationally via VC, and there's some strong demand for that. And that's probably the biggest technological change that's taking place.
Yeah. I'm curious if others have, if they see an evolution in the technology that's supporting the way in which they work. Is it just iPads and really kind of, insignificant changes? Or, and David, I guess this might be more a question aimed at you, given your entire business model and the data that you vend wasn't around, say, 15 years ago.
Yeah, no, I'd say it's a really good question. We've cautiously rebuilt our client research portal, things like that, but took time doing it and didn't rush it out, and really tried to talk to the three big regions we sell to and to the different client types we sell to figure out what made the most sense and how are they going to access it and why and where, and that even extends to we distribute our research obviously online, and we use iPrio's Big Doe as our research email engine, and the buy side has a mandate now to measure engagement, right, through links of the research itself, or the actual research in the body of the email won't be considered a read versus a link opened and all these other. So, we what we don't do is we really don't change our model per se, but we sort of leverage technology, not for its own sake, but for to help our clients, be smarter about what they do. We still feel though to Stewart's point that the hand-holding is really important. I mean, when we're not out marketing nearly as much as the sell side, right? We're a small firm, we're 60 people. We cover about 60 clients globally, so we're in each of the markets, 3 or 4 times a year. So I'm here this week seeing our clients in Hong Kong. And so the one-on-one meetings are really important, and they continue to be really important. We don't need to do it 12 times a year, but we need to do it 2 or 3 times a year. And then the conference calls are really important. I mean, believe it or not, still scheduling something accurately, quickly, efficiently, and making sure that we're open in New York and open in China at this, 12 hours and 12 hours, and making sure because our feeling still is, if you don't fill that slot, someone else is going to. So technology sometimes can't enable what I think one of our research sales associates can manage. So,
Right,
yeah.
right. So you talked about the challenge of being a small research house and trying to market globally. Some of the audience may have seen that about 8 weeks ago we launched a investment research marketplace, which is really in kind of a POC phase. It's focused on Europe. There are both kind of big names and more boutique providers. And, that is really our first test of what other commercial models are likely to succeed in this brave new MiFID world. So I'm curious which commercial models you've adapted, if there are areas that you see as areas of future growth, if the buy-side customer base are coming to you and saying, this model's fine, but we'd prefer X. What are you seeing in the commercial model for research as we all adjust?
Yeah, that's a great question. And again, I may be wrong by my answer, but I have found that the platforms, the ones that were built early in London, for example, I didn't feel like, and there's some really good people doing these, and I think they were early to think about it 2 or 3 years ago, calling me and inviting me over to talk about the impending doom of MiFID and what's going to happen. We end up relying on events like BattleFin and other events. I don't know if you're familiar with them.
Sure.
They're going to be coming actually to Hong Kong, just because it's a simple pass-through, and we don't do all of the events. We're generally trying to find, to some degree, a fundamental data buyer, which isn't necessarily a pure data buyer. So we target the events where we know there's going to be a lot of senior or fundamental PMs going. Things like Miami,
Yeah.
they'll tend to go. And even in Hong Kong and London, where they're actually going to launch as well. Where we find they're less successful is in New York when they're on the Intrepid, the old battleship,
Right.
and you just don't get the sort of meetings that you want. But I got to tell you, we went to our first event in Miami. I was blown away by the quality. What I found though was on the buy side, the competing sort of platforms went to hear about different data providers as much as they did to see what the other platform was buying or talking to.
Right,
So I thought it was a little creepy, actually.
Right. And Stewart, does that match what you're seeing from customer demand for a commercial model? Obviously, you have basically a top 3 place globally as a research provider. Is there a lot, or is there sufficient kind of alternative commercial model discussions, or is it very much, I guess you guys might well have just been going through a kind of year-long price discovery phase of where do you actually price research for the post-January 3? Do you anticipate further innovation?
Sure. I think it's early days in terms of MiFID, so we're still there's a lot of discovery still to take place, and discussions with our clients, and we still have to go through a full yearly cycle with our clients. So there's still much more to come, both on our side and on the buy side. But it's one of the benefits of what's happening is it really helps us concentrate on our value proposition and making sure that we're very, very well connected to all our clients, and making sure that what we produce is valued by our clients and wanted by our clients, because it's much more transparent than it ever was about what our clients value and what they don't value. And so it's really made us lift our game and make sure that we develop those relationships and make sure that we're looking after our clients and customers even more than we have been.
Bill or Monica, any buy-side perspective on that? Is the have we found the right mix of commercial models for all of the different types of research and data that are now available, or do you think we're at the start of a long period of innovation?
I guess from my perspective, we do see this shift. I mean, even from what's available on the street research, we do see this shift from publishing research over to desk analyst model, and I think that will continue. I think that the reality is the desk analyst side is important for the sell side themselves as well, because they obviously do also have a certain amount of advisory value to the flow traders, and they can push out their commentary, their views faster without all of the red tape of compliance these days. So I think that probably will continue, especially because on the credit side, most of our instruments are OTC, and it's not quite like what's all traded on the exchange. I think similarly, Buyside has been and has to continue mimic that type of a transition, meaning that we can't afford anymore to have research analysts doing research theoretically in a box, and we have to have people that are much more commercial and market-oriented. So, I think in that sense, this is a constant evolution, and we all have to sort of find our fit in the market to to be able to have that forward-looking price projection and thought process, so I guess what I see is that in terms of tools from our side, we in fact have to become even more self-reliant, and the rating agencies, for example, the rating agency reports generally have had been, it's a factor that feeds into what we look at, but it has not been something that we've ever really relied on. And then as we have sort of fewer coverage generally from the street, I think that it will be interesting to see how the market's consensus forms on bond pricing, and how quickly people react to news, because I think in emerging markets, I've found, compared to trading developed markets, though there is a much more of a knee-jerk reaction. So I think we are still in the phase of evolving.
Yeah, I would agree. I think that I think there's a couple of key questions you could ask yourself. So one would be, have we reached a stable state or the peak of the number of buy-sides that are going to switch to a MiFID type model, i.e. paying for research from their own P&L? And I think the answer is no. I think that MiFID is going to be transmitted globally, not through regulators, but through clients, because clients buy products from asset managers across multiple jurisdictions. And the natural question is then to say, okay, if you're paying for the research in Europe, why aren't you paying for the research in Asia? So even though there's no MiFID regulation in Asia, I think client pressure will bring MiFID practices to Asia and to other regions. So have we hit peak in the number of people adopting that practice? No, I think we're very far from it. And secondly, if you think about the pricing of research on the sell side over the last 18 months or so, it fell very, very significantly from the original kind of offers that were coming from the sell side as to how their research was going to be priced, to where we ended up on January the 3rd at the start of MiFID. There was a very significant delta. So have we hit steady state, or have we bottomed out the price of research? No, I don't think we have. I think we see the price of research continuing to fall. And I think that makes it very challenging for independent research providers. The pricing model that they had a year ago or 18 months ago may not be a pricing model that works now. It may need to adjust. So I think there's definitely a very important role for those independent research providers to play in this kind of new ecosystem. But I don't think we're at equilibrium yet. And I think marketplaces, I know the Thomson Reuters one, there's one or two others that sort of are out there that have some level of credibility. I sincerely hope and sincerely believe that some of those will take off and allow independent research providers to also play their important role in this going forward.
Yeah, no, I agree. I think that the role of technology in allowing smaller vendors to scale is going to be huge, and hopefully we do have a role to play in that. I think it's time to wake the audience up. So we have a couple of questions here. So the first one, I assume it's going to appear on the screen and I don't have to press any buttons. The first one is, yes, we're on the same page. So when it comes to research, which best captures your current priorities? So I'm interested here if this jives to what we've just been saying. Yes, it is. It's real time. So identifying new content to use and focusing the sources of research. So it's very much a testing and implementation story. Starting to get a few more votes. So identifying new content to use. Obviously, I've tried to only lightly touch on alternative data, given we have a whole additional panel on the topic. So we'll talk much more about that later. But I don't think there's any real surprises to this. Focusing sources of research. Oh, we now have a three-way tie. But and the second question, which I guess is a more forward-looking. If we jump to the next one, which best captures your use of research over the next couple of years? I'm curious to see how much change is anticipated and what type of change. So we have about 8 minutes left. So I want to give the audience a chance to ask this panel and stop having me doing all the questioning. So please, if more data-driven research, very interesting. I guess that's good news for you. Yeah. So 58%, very clear winner in the end. So to use more data-driven research. So if the audience has questions, there I assume is both the ability to ask via the app or to raise your hand and do it the old school way. So here, what do you see as incoming buy-side reach flow trends in ASEAN countries where traditionally less liquidity and less impact by MiFID? So I guess I'd start with Bill there and just ask if, is there a complete consistency to your Asian research focus or do you make adjustments for liquidity and other factors like that?
We don't. Clearly, we need to take liquidity into account when we're constructing portfolios, but I'm not sure liquidity per se is a factor when you're doing research. Of course, if you're using liquidity to segment the universe into large cap and small cap, you could then say that's a difference that you definitely want to take notice of. Obviously, the small cap universe is much less efficient in Asia, and the coverage of research from the sell side across the small cap universe is much lower than for mid and large caps. I think only about 20 to 30% of companies have 2 or more brokers covering them in the small cap space versus I think the average is probably multiple of that in the large cap space.
Yeah, thank you. So if we look at the proportion of time spent reacting to events versus new ideas, has that process evolved? Or that balance, has that changed? I'll direct that to you again, Bill, I'm sorry.
Reacting to events, obviously that depends on how many events there are, but as I mentioned in the presentation, the lesson that history teaches us is that the events matter a lot less than you think at the time. I know that's difficult. People don't like that. And I'm not saying you should ignore the events, But if you can't predict what the outcome's going to be, and you can't predict what the impact of the outcome is going to be, what's the point of trying to invest according to that event? So we certainly like to spend 90% plus of our time on the fundamental research and as little time as possible reacting, although, of course, there are times when you have to react and you have to adjust portfolios.
Yeah. Monica, any differences from your perspective?
Yeah, actually, I don't know if I can pin a number, 90% or not, but I would agree that we would spend a lot more time sort of on, current portfolio and constantly being, diligent about doing the work across the key names. I think for us, I guess, aside from the macro events, which you obviously have to pay attention on as an overlay, it's really about events on specific names. And so, if there are news headlines and so forth, that reaction really still stems from the amount of preparation work that we would have done from the beginning, which is why most of our time will continue to focus on, knowing each animal first.
Okay, so the third question is around crowdsourced estimates, and to me that is a phenomena that is primarily US rather than particularly prominent in Asia. So I don't know if that's going to be particularly relevant, unless anyone has any specific comments to make on that topic. No, so...
I would say just very quickly, psychological research, if anybody's kind of read around behavioral finance, it tells you that the more people that contribute to an average, an estimate, the better estimate it'll be.
Yes.
However...
Unless it's Brexit.
Unless it's, yes, it's not 100% infallible, but on average, it's a better estimate. The problem, I think, with amateur crowdsourced estimates, you don't know what the origin is of them. That there could be inside information, there could be other problems with that, and that's very problematic for the buy-side sort of professional community.
Right. Have in-house broker voting processes changed as a result of electronic resources due to MiFID? I assume the answer to that's clearly going to be yes. But
well, I think under MiFID, broker voting should be dead. I mean, I'm still amazed that people talk, sell side, not Stewart, of course, but other sell sides will come in and ask us, how did we do on the broker vote? And what broker vote? Have you read about MiFID?
So, there's been a number of mentions as we've talked around macro events, and either from a behavioural finance perspective, whether or not they're important, but as we look at the changing political landscape of the region, as we look at the increased importance of Chinese political events, both regionally and globally, I'm curious if you are adding additional research sources that have more of an ability to provide, that type of information. And in Europe, we've seen, an increased focus on Brexit and political risks there. In the US, as Mr. Trump has tried to repeal ACA, we've seen kind of a lot more focus on politics as a driver of market performance. So I'm curious if there has been any kind of broader adoption, or in Stewart's case, if you've ramped up your ability to support and opine on events like that.
Definitely, we've got a global political analyst, and so it's all part of our global offering, and increasingly there's lots of demand at our client events and for our readership stats. There's a lot of client interest in us commentating and giving analysis on political events.
Bill, are you a consumer of that type of information, or does it contradict what you said earlier around looking through them? Yeah, I'd like to. I'm sort of constantly encouraging my teams to consume less of that information. We have a macro team within the organization that should spend 100% of their time consuming that information, and then through them, we gain an understanding of the relevance or otherwise of
And
those
everyone else should
approaches.
stay bottom up. And
Ideally, that's the model, and that's what we try to focus on.
so there's 36 seconds on the ticking clock. I think we're probably ready to wrap up and keep everything on schedule. So thank you all. Hopefully for the audience, that was an interesting session. I appreciate everyone's time on the panel, and thank you very much for your time.
Thank you.